For over 2 centuries, one family name has stood at the dark crossroads of money and power. The House of Rothschild rose from nothing, forged an empire of wealth, and quietly pulled the levers of history. Their story is one of ruthless ambition, secretive strategy, and unwavering family unity. A saga that evokes fear, awe, and endless curiosity. How did a line of outsiders climb to unprecedented dominance, influencing wars and empires from behind the scenes? Let's dive into the shadowy world of the Rothschilds, where fortune and intrigue are forever entwined. In the late 18th century, the idea of a Jewish banker shaping global affairs was unthinkable. Back then, the Rothschild story began in the unlikeliest of places, a cramped Jewish ghetto in Frankfurt, Germany. Poverty, prejudice, and limitations defined young Mayor Amschel Rothschild's early life. As a Jew in Frankfurt, Mayer could not own land or join most trades. Opportunity was scarce by design. The ghetto's alleyways overflowed with peddlers hawking second-hand clothes and tarnished goods. It was a dead end by decree. Jews were barred even from noble trades like silk or weaponry. But Mayor Rothschild was not one to accept limits. Determined and shrewd, Mayer started as a humble textile trader like his father. Yet he quickly grew discontented. Mere pennies from cloth weren't enough for his towering ambitions. He hungered for something bigger. Mayer noticed one trade that was open to him, dealing rare coins and antiques for the local nobles. Here, he discovered a golden opportunity, quite literally. Trading in collectible coins brought far higher profits than rags ever could. Mayer proved to be a savvy merchant, hunting down undervalued coins and curios and reselling them at a premium. Each deal honed his skills and fattened his purse. Before long, Mayer's sharp eye and bold tactics earned him a reputation. He secured a wealthy patron, Prince William of Hesse-Kassel, one of the richest nobles in Europe. Mayer became the prince's favored court factor, essentially an investment manager and supplier. And it's here that Mayer deployed a brilliant, if ethically gray, tactic now known as front-running. When Prince William wanted to buy a cache of gold coins, Mayer would secretly buy up those coins first, using borrowed money, then resell them to the prince at a higher price. In effect, he acted as both buyer and seller, taking a slice of profit in between. It was genius. Mayer earned a commission for the deal and pocketed the price difference. He profited twice from one transaction, cleverly outmaneuvering the market and even his own clients' knowledge. This front-running scheme paid off enormously. By 1782, Mayor Amschel Rothschild had amassed a colossal fortune and won Prince William's complete trust. He was now managing the prince's vast wealth, a stunning rise for someone who a few years earlier was peddling textiles in a dirty alley. Mayer had become one of the richest men in Frankfurt, but for him, being rich was not enough. Mayer Rothschild wasn't driven by mere money. Wealth, to him, was a means to an end, a way to earn respect in a world that looked down on him, and a foundation for something far grander. He envisioned a legacy. In his mind's eye, he saw a dynasty that would outlive kingdoms and span continents. Money was just the scorecard. Power and permanence were the real game. To achieve that, Mayer knew he needed more than savvy trades. He needed respectability. In the 18th century, nothing lent more prestige to a financier than owning a bank. Traders and moneylenders were useful, but bankers dealt with governments and monarchs. Bankers sat at the table with the mighty. So, Mayer set out to transform himself from a merchant into a banker, turning his thriving trading business into a formal bank. This leap was his masterstroke. It gave the Rothschild name a sheen of legitimacy and opened doors that had been locked to a ghetto merchant. By the end of the 1700s, thanks to Mayer's relentless drive, the Rothschild Bank in Frankfurt was the biggest in the city, and Mayer Amschel Rothschild was its richest man. But even atop this mountain of wealth, Mayer's ambition burned. He was building something far greater than his own fortune. He would often remind his children that wealth could vanish, but family and strategy would carry on. He once imparted a simple but profound lesson. Keep the family together at all costs. Unity would be their strength. In Mayer's mind, the Rothschilds working in concert could accomplish anything, perhaps even rule finance itself. Mayer Rothschild had 5 sons, and he saw them as the pillars of his future empire. In an unprecedented move, he decided to deploy his sons across Europe like agents of influence. Each son would establish a Rothschild bank in one of Europe's great capitals, extending the family's reach across borders. They were to operate independently but remain tightly bonded in loyalty and information sharing. In Mayer's grand design, this family network would be virtually everywhere that mattered. It was an ingenious plan, a multinational banking dynasty controlled by one family long before anyone had heard the term globalization. So, in the early 1800s, the 4 eldest Rothschild sons set off from Frankfurt in 4 directions: Naples, Vienna, Paris, and the crown jewel of the era, London. The youngest son stayed in Frankfurt to mind the original bank. Each brother carried with him a share of the family fortune, Mayer's strict instructions to cooperate, and the weight of great expectations. They were not just going to seek their own fortunes. They were pioneers establishing the Rothschild flag in new territory. Of all the destinations, London loomed largest with opportunity and peril. At the dawn of the 19th century, Great Britain was the world's superpower, a titan upon which the sun literally never set. The British Empire spanned continents, guarded by the unbeatable Royal Navy. London had become the beating heart of global finance, home to the mighty Bank of England and a booming stock market. If a Rothschild could conquer London, he could truly influence the world. To Nathan Rothschild, Mayer's 3rd son, this was both exciting and terrifying. Nathan was dispatched to London in 1798 and arrived with £20,000 in capital. A fortune for most, but merely seed money in the scale of his ambitions. He also carried something invaluable: Mayer's absolute trust that Nathan would make London the jewel in the family empire. But trust alone didn't lighten the immense pressure on Nathan's shoulders. He was determined to prove to his father, and perhaps to himself, that he could match or even surpass what Mayer had achieved in Frankfurt. The task was daunting. Nathan was a stranger in a foreign land, an outsider in British high society, and up against well-established banks. Yet those challenges only sharpened his resolve. Nathan Rothschild was fiercely ambitious, competitive to his core, and famously quick to take offense if underestimated. London would learn to neither underestimate nor offend Nathan Rothschild. Nathan wasted no time hunting for opportunities to multiply that £20,000. He founded in an industry that was the lifeblood of Britain's early 19th century economy: textiles. The Industrial Revolution was in full swing, and Britain's textile mills were booming. But Nathan wasn't content to simply trade goods. He engineered a scheme to squeeze profit from every step of the process. According to his own account, Nathan realized there were 3 profits to be made in textiles: one on the raw cotton, another on the dyeing, and a third on the finished cloth. Why leave money on the table for someone else? Nathan cut deals directly with manufacturers. He would supply the cotton and the dye, They would produce the cloth, and he'd take a cut on each phase. I got 3 profits instead of 1. He later bragged, and I could sell goods cheaper than anybody. In a short time, Nathan's 20,000 pounds bloomed into 60,000 pounds. An astonishing return in those days. This one clever move established him as a rising star in London's financial scene. Nathan's resourcefulness didn't stop at legitimate trade. When official avenues had limits, he found unofficial ones. Continental-official ones. Continental Europe was in turmoil with the Napoleonic Wars, and Britain had slapped export bans on certain goods. High tariffs and naval blockades made moving gold or goods to the European continent extremely tricky. But where others saw impossibility, Nathan saw profit. He became, in no uncertain terms, a smuggler. With deft management and a web of contacts, he covertly shipped textiles, gold, and other valuables across war-torn Europe, evading Napoleon's blockades. It was dangerous work. Getting caught could mean ruin or worse. Yet Nathan's foresight and daring earned him rich rewards. By 1808, only a decade into his London venture, Nathan Rothschild had skyrocketed from newcomer to a financial force. His sales had surged to over 800,000 pounds. The bold young banker had effectively outplayed British rivals on their own turf, and he was just getting started. Back in Frankfurt, the patriarch Mayor Amschel Rothschild watched his son's progress with pride. Each success in London, Paris, Vienna, or Naples confirmed to Mayer that his blueprint was working. But in 1812, before he could see the full fruits of his plan, Mayer fell gravely ill. As his health deteriorated, Mayer realized his end was near. For all his accomplishments, this was a perilous moment for the family empire. A father's death can often breed chaos and rivalry among ambitious sons. Mayer was determined not to let death undo what he had built. In his final days, he gathered his sons and made them swear an oath that they would remain united above all else. No matter what temptations or disagreements came, the family must present a united front to the world. Family unity first and above all, he urged. It became almost a religion for the Rothschild heirs. Mayer even laid out unusually strict rules in his will. The brothers would work in partnership, share profits, and even intermarry within the family to keep their fortune intact. This iron bond of loyalty was to be the Rothschilds' secret weapon across generations. It was a poignant scene, the dying patriarch passing the torch, entrusting his legacy to the very unity of his children. Mayor Amschel Rothschild died in 1812, confident that his family's destiny was secure. And indeed, the House of Rothschild was only at its dawn. No sooner had the brothers established their banking outposts than Europe was engulfed in the Napoleonic Wars, a conflict that would rage for over a decade and redraw the map of the continent. While war brings chaos to most, for the Rothschilds it brought unmatched opportunity. Mayer's sons had positioned themselves brilliantly. With family banks in key countries, they had access to information, capital, and government contacts on all sides of the conflict. This was the moment their network truly became their net worth. It started with the British war effort against Napoleon. By 1814, British forces under the Duke of Wellington were pushing into France, attempting to finally defeat Napoleon. But wars are won as much by wallets as by weapons. An army marches on its payroll. Wellington found himself in France needing vast sums of hard currency to pay troops and buy supplies locally. Traditional supply lines and treasury funds were stretched to the limit in this prolonged war. Enter Nathan Rothschild. He caught wind of Britain's dilemma and saw a once-in-a-lifetime chance to elevate his young bank into the big leagues. Nathan orchestrated a daring plan. At that time, the British East India Company had a hefty 800,000 pounds worth of gold up for sale, exactly what Wellington needed. Nathan went to the government's auction and, to everyone's astonishment, bought it all. Now, he alone controlled a resource vital to Britain's war. When officials realized this upstart banker had cornered the gold market they desperately required, they had to come knocking at his door. Nathan didn't gloat. He smoothly offered his services. He would get the gold to Wellington's army using the Rothschild couriers and smuggling routes in exchange for government bonds and a fee. It was extremely risky. Shipping that much gold across a war-torn sea and land could end in capture or loss. But Nathan delivered. Overcoming every obstacle, he transported the gold from London to Wellington's forces on the continent, ensuring the army's campaign didn't stall. Wellington was able to keep pressing Napoleon's armies thanks in large part to Nathan's gold. Reflecting on it later, Nathan coolly said it. "That was the best business I ever did." Indeed, the profit Nathan's bank earned from that deal was massive, but even more valuable was the prestige. The British government now owed Nathan Rothschild a favor, and his reputation as a financial genius was cemented. And then came Waterloo. In June 1815, Napoleon was finally defeated at the Battle of Waterloo, a turning point that reshaped Europe's future. Here, fact and legend intertwine in the Rothschild story. According to popular lore whispered for generations, especially by those awed or fearful of Rothschild power, Nathan Rothschild received news of Napoleon's defeat before anyone else in London. The legend claims that Rothschild couriers, perhaps riding the fastest horses or even using carrier pigeons, brought Nathan word of Wellington's victory, hours, maybe days ahead of official messengers. Realizing Britain had won, Nathan allegedly hatched an audacious plan. He hurried to the London Stock Exchange and began selling British government bonds in a frenzy. Other traders, seeing the famous banker apparently betting on a British defeat, since heavy selling usually meant bad news, panicked and also sold off their bonds, causing prices to plummet. At the height of the fear, the legend goes, Nathan's agents then quietly bought back huge volumes of bonds at bargain prices. When news of victory finally reached the public and bond prices rebounded, the Rothschilds supposedly made a fortune in one cunning swoop. True or not, this tale of Waterloo insider trading has endured as a symbol of the Rothschilds' almost mystical information network and nerve. The family always denied that exact version of events, and historians debate the details. But one thing is certain. Nathan did gain early information about Waterloo's outcome and benefited enormously from it. Whether by pigeon post or good intelligence, being first with the news became a Rothschild trademark. Through war financing, Nathan Rothschild's London bank became a powerhouse. The Rothschild network enabled them to move money and information faster than any rival. In an age before telegraphs, the family's couriers, horses, and ships created a private communications web that beat even governments. They could exploit tiny windows of advantage in currency values and bond prices across different countries. In essence, they were the first global arbitrageurs, early currency traders who turned volatility into profit. For example, a loan to Prussia might require converting British pounds to Prussian currency. The Rothschilds would handle that exchange and often speculate on currency moves with their insider knowledge. They charged hefty commissions for moving money across borders, sometimes up to 8% fees, an eye-watering sum by today's standards. Governments paid it because no one else had the Rothschilds' reach or reliability. War after war, the profits rolled in. By the 1820s, the House of Rothschild was the unrivaled giant of European finance, and Nathan himself was arguably the richest private individual in the world. Some whispered that the Rothschilds' fortune had grown larger than even the Bank of England's reserves. But even the most powerful are still mortal. On July 28, 1836, tragedy struck. Nathan Mayer Rothschild died suddenly at just 58 years old. The man who had bested emperors and markets was gone unexpectedly early. The news sent shockwaves through the financial world. Stock markets quivered. The mighty London Times eulogized that Nathan's death was one of the most important events for Europe in a long time, noting that no similar operations had ever existed in Europe. It was as if a king had fallen. It was also a perilous moment for the family. Nathan had been the driving force of their largest branch. Would the Rothschild empire collapse without its London titan? Thanks to Mayer's foresight and that ironclad unity he instilled, the House of Rothschild weathered Nathan's death. The family's decentralized banking structure, with strong Rothschild banks in Paris, Vienna, Frankfurt, and Naples, meant no single loss could topple the whole. Nathan's brothers and even his own sons were ready to step up. The dynasty mourned, but it also moved forward. They had no choice. History was speeding up, and new challenges awaited. Nathan's youngest brother, James Mayer Rothschild, who ran the Paris bank, now emerged as the likely commander-in-chief of the family businesses. If Nathan had been the bold trailblazer, James was the quiet strategist, just as ambitious and astute, but operating with a French flair and discretion. By the 1840s, under James's leadership, the Rothschilds remained dominant, but the financial world was getting more crowded. The Industrial Revolution was minting new wealthy industrialists. Other banks were muscling into the lucrative government bond market. The Rothschilds' margins on big loans were being chipped away by competition. James Rothschild felt the weight of great expectations on him. He was determined to not just maintain the family's supremacy, but to find the next big thing that could fuel another century of prosperity. He found it in railroads. In the early 19th century, railroads were the high-tech revolution of their time, much like the internet boom of the late 20th century. Steam locomotives and iron tracks were transforming travel and commerce, shrinking distances and promising huge profits. England opened the first railroad in 1825. Soon, France, Austria, and others rushed to build their own networks. James recognized that railroads weren't just a new industry. They were an entirely new investment arena requiring massive capital. Governments and entrepreneurs needed big loans to lay thousands of miles of track. And who better to arrange those than the Rothschilds? Throughout the 1840s, James's Paris bank, often in partnership with his brothers across Europe, poured funds into railroad companies. They didn't just lend, they also took ownership stakes, and crucially, they formed investor syndicates, essentially bringing in other wealthy investors so the Rothschilds could control projects with minimal risk to their own capital. It was a brilliant strategy. Use other people's money to build empires, skimming profits while limiting downside. Commission fees from these ventures were enormous, and the family's wealth swelled even further. By now, the House of Rothschild was far more than just banking. They had their hands in mines, metals, railways, even early oil explorations. They were industrial kingmakers, especially in France and Austria. Yet, as the Rothschilds reached new heights, millions of ordinary people struggled. The gap between rich and poor in mid-19th century Europe was as glaring as ever. A working family toiled endlessly in mills or farms and still went hungry, while lavish wealth accumulated in the hands of a few. And the Rothschilds symbolized that elite wealth. Discontent was brewing among the masses. By 1848, revolution was in the air. That year, a wave of violent uprisings swept across Europe. fueled by economic misery and demands for more rights. In France, the king was overthrown, and the Second Republic was declared. The turmoil was terrifying for bankers like the Rothschilds. Governments they lent to were toppled, and angry crowds saw financiers as part of the problem. In Paris, James Rothschild faced a dire situation. If the revolutionary government defaulted or if panicked investors pulled deposits, even the mighty Rothschild Bank could collapse. Indeed, the Paris Rothschild Bank teetered on the brink during the 1848 upheaval. Desperate, James turned to the only people he could trust, his extended family. He secretly reached out to his nephew Lionel Rothschild, Nathan's son, who now ran the London branch, pleading for an emergency lifeline. It was a supreme test of the family unity doctrine. Lionel knew that bailing out the Paris bank was risky. He'd be throwing good money after bad, perhaps. But ultimately, Lionel agreed. Family came first. The London bank quietly funneled funds to Paris, and James's bank survived the crisis. Through that tumultuous year, the Rothschilds proved that their loyalty to each other was stronger than any revolution. Lionel de Rothschild, having saved his uncle's bank, emerged as a key figure in the next generation. He also carried a burden that his elders never did, an urge to fight prejudice on the public stage. Despite their wealth, the Rothschilds still faced social discrimination in many circles because of their Jewish heritage. Lionel believed the family's accomplishments could be a platform to improve civil rights for their people. In the 1840s, Jews in Britain were still barred from Parliament unless they swore a Christian oath. Lionel set out to change that. He leveraged his stature and not inconsiderable funds to win election to the British House of Commons in 1847, a remarkable feat on its own. But when asked to swear the oath of office on the Holy Scriptures, which by tradition meant the New Testament, Lionel refused. In a dramatic stand for his faith, he insisted on swearing on the Old Testament as a Jew. Parliament was stunned. A crisis ensued over whether a Jew could take a seat without the Christian phrasing. For 11 long years, Lionel was elected repeatedly but not allowed to serve as the law was debated. Finally, in 1858, the rules were changed and Lionel took his oath on a Hebrew Bible, becoming the first Jewish member of Parliament in Britain. It was a symbolic victory against bigotry, and the Rothschilds' prestige only grew. Now they weren't just moneymen, but also trailblazers for equality. The House of Rothschild seemed unstoppable, exerting influence in finance, politics, and industry alike. But even as Lionel took his seat in London and James expanded railroads in France, storm clouds gathered across the Atlantic. A new power was rising, one that would eventually eclipse them. Rothschilds had dominated European finance for half a century. But now the United States was emerging as a colossus in its own right. And with it arose a formidable rival banking dynasty, the House of Morgan. For years, the Rothschilds viewed the United States as a backwater, a wild, uncouth place filled with what one Rothschild scion called entrepreneurs of questionable sanity. But by the mid-19th century, that land of madmen was proving to be anything but backward. The U.S. was an economic powder keg ready to explode. Fueled by westward expansion, rapid industrialization, and a flood of immigrant labor, America's economy surged. After the Civil War, 1861-1865, the U.S. entered what is now called the Gilded Age, a time where giant industrial empires ruled by men whose names became legends, and sometimes curses, in their own right. There was Cornelius Vanderbilt, Railroad King, Andrew Carnegie, Master of Steel, John D. Rockefeller, the oil baron who built the Standard Oil monopoly, These tycoons were building entire industries from the ground up, amassing fortunes that rivaled, and in time, surpassed those of Europe's aristocracy. Wall Street, the financial district of New York, was fast becoming the new center of global finance. And one name on Wall Street would rise above all in the banking realm: Morgan. It began with Junius Morgan, a respectable London-based banker who in 1864 took over the merchant bank of George Peabody and Company. Junius Morgan was conservative, prudent, and well-connected. The perfect qualities for a transatlantic banker. He understood something crucial. Wars and governments were the most profitable clients a bank could have. European banks like the Rothschilds had known this for years. Now Morgan intended to play that game too. His big break came with the Franco-Prussian War of 1870-71, a conflict that would unify Germany and alter the balance of power in Europe, when Emperor Napoleon III of France declared war on Prussia. Most observers, including the Rothschilds, thought France was overestimating its chances. The Prussian Chancellor Otto von Bismarck was a strategic genius with a modern army at his back. The Rothschilds had financed many wars and developed a sixth sense for likely winners and losers. In this case, they doubted France would win. So both Rothschild and their major British rival Baring brothers refused to lend money to the French government, fearing France might default if defeated. Junius Morgan, however, saw opportunity. He wagered that win or lose, France would repay its debts. The country was wealthy and had efficient tax collection, even if its politics were shaky. When France frantically sought funds to buy weapons and pay troops, Morgan's consortium stepped in. Through a syndicate of investors, including some European backers, Morgan raised over £10 million for France's war effort. The war ended disastrously for France. A swift Prussian victory. Paris fell, the French emperor was captured. And Germany's new empire was proclaimed in the Palace of Versailles. Yet, in the aftermath, Morgan's bet paid off. France, humbled but determined to recover, honored its debts in full, even prepaying much of the war loan by 1873. Morgan's reward was immense. The war loan deal netted him about £1.5 million profit, catapulting his firm into the upper echelon of world banking. The House of Morgan had arrived as a formidable new force, just as the Rothschilds' tightly knit dominance began to loosen. The Rothschild patriarch James in Paris died in 1868. Other siblings were aging or passing on. The once unified family front started fragmenting as the next generation took over. Some Rothschild cousins focused on high society and art more than banking. Others pursued separate ventures. Meanwhile, sensing that Europe might no longer offer endless growth, the family began investing overseas. They financed railroads in India, lent to governments in Egypt, and even helped Britain buy control of the Suez Canal. By the late 1800s, about 37% of the Rothschild investments were outside Europe. They were still influential, but not infallible. New opportunities also meant new risks. One such risk was in the New World. In 1893, the U.S. was hit by a catastrophic economic depression after a speculative bubble in railroads burst. Banks failed, rail companies went bankrupt, and unemployment skyrocketed. This panic of 1893 shook the U.S. to its core. The U.S. government itself was in trouble. Its gold reserves, which backed the U.S. dollar, were dwindling alarmingly, due in part to a run on gold as people traded in paper money for hard metal. President Grover Cleveland, staunchly committed to the gold standard, refused to devalue the dollar or print money. Instead, he turned to the era's financial titan for help, J. Pierpont Morgan, the son of Junius Morgan and now head of the House of Morgan. J.P. Morgan agreed to rescue the U.S. Treasury by orchestrating a massive private gold purchase. But even he didn't have all the gold needed. There was only one family on Earth with the scope and supply of gold to potentially backstop a country: the Rothschilds. In a historic collaboration, Morgan and Rothschild joined forces. Morgan arranged a $65 million bond issue, a huge sum then, to raise money from investors. With that money, he struck a deal with the Rothschilds to purchase 3.5 million ounces of gold from Europe and ship it to America. The operation was risky. It had to be done quickly and quietly to steady markets. When news broke, populist critics raged that America had been sold out to the Rothschilds and international bankers. But in reality, the intervention saved the U.S. economy. The gold infusion stabilized the dollar and restored confidence. And Morgan and the Rothschilds reaped healthy profits from underwriting fees and bond sales. In fact, when the special U.S. gold bonds were offered to the public, they sold out in just 30 minutes. A testament to how much faith investors had in deals blessed by Morgan and Rothschild. By the dawn of the 20th century, the balance of financial power was shifting. New York,